The SP 500 is still about 5 below the late 2021 level. Everyone is excited about the recent increase in the stock market. Stock market, as measured by the SP 500, is still down with dividends reinvested from late 2021, about 5, but adjusted to inflation, the stock market in real dollars is down about 15. Hardly anything to be excited about. Also, if you took out the 7 largest stocks which are going up this year, the stock market this year is about flat. Check out the ETF RSP, which is equal weight for every stock in the SP 500. Actually, we are still in one of the longest drawdown periods in the last 20 years. You make most of your money in a bear market, you just don't realize it at the time. Also rose from 2020-2021 the most in history. Everything has to fall back, settle, and go up. The market does not go up in a vertical line. I jumped into the market in late 2021, January 2022, so I'm still negative overall. Yay, melting face. Actually one of the longest drawdowns in the last 20 years. Yup. Still, the stock market is generally the best long-term hedge against inflation. So I'm ready for it to bump up that 15. IDCAED hard into late 2022, so my returns are better than ever. The last 2 years have been inconsequential to me in the big scheme of things. 2007-09 was much more sobering than this episode. It was fun watching my balance drop by over 50 from September 2007 to February 2009. Investors had to wait until October 2013 for the SP to recover to the 2007 level. If episodes like this cause you anxiety, investing in the market may not be for you. This is but a speed bump. Zoom out. In other words, you had 2 full years to buy the SP 500 more cheaply. You should buy puts on the SP 500 like VU puts to follow your sentiment and thesis, then follow up this post in a year or 2 and I guarantee you will have lost most or all of your money. Don't bet against the SP 500, it will always go up over a long trend. Just zoom out to see. Buy, buy, buy. No one goes all in right at the peak. Buying in as you got paid, you hit plenty of good buy points over recent years. Laughs nervously in CAD USD exchange rate VFV is up 16.7 in the past year. So you just picked a random date for your analysis? I invested a significant lump sum in the middle of 2021. Needless to say, my portfolio has been through the ringer since. But I continued with my DCA plan and now my account is higher than it was after the lump sum. Don't worry when the market is down. If you are still in accumulation phase, as I'm sure most of you are, then you should be happy to buy stocks on sale. I never stopped investing, my accounts are at all-time highs, I can't complain. Hardly anything to be excited about. Are you kidding? That means big gains are still to come. And we've been buying at a relative discount. SP 500 returns by year. 2023 YTD 19. 2022 18. 2021 29. 2020 18. 2019 31. What a great run. Dollar cost average regularly and sit back and enjoy the gains over time. So I've been buying cheap SP stock for 2 years now? Sounds great. There's plenty of room upside after the big inflation and rate hike scare. If you invested at the peak of the dot-com bubble, you wouldn't have started to turn a profit for 14 years. You're making this bigger than it is. If true, the insight is the growth in stock prices recently is due to inflation. That's a heck of an insight. Thanks op. That's okay, I bought SPY at the bottom of 2020 in March. and still near historic PE ratios. The only point in history PE was higher was right before the dot-com crash. We need a big drop to go. Are years of going sideways in order to return to historic averages. Anyone thinking they're buying low right now? You really aren't. Unless you are buying value. Current Shiller PE is 30. Mean is 17. Median is 16. Which means the equity risk premium is pretty damn low right now. Any young investor with a big time horizon should be praying for an extended bear market. Hardly anything to be excited about. It's on sale. Unless you retired 2 years ago, this isn't a problem at all. Even then, it wouldn't be much of a problem. But 2021 was fake. Why compare it to that? Better to compare today versus January 2020. How's your cash position doing? It was a bubble, and a short one at that. It may take years to get back there. Or it could happen on Monday. Have you looked at the anchored VWAP from that point? This gives a better idea of what the performance has been from that point for the people who DCA. Not precise, but a better estimate than just percentages. I know. Isn't it great? Nice. My SPAXX money market was paying 0.01 in December 2021. Suck it up, Buttercup. If that's the case, then things are on sale. I've put a couple $100,000 into the market since late 21. Excited to see that payoff in 30 years, assuming money and people still exist. I hope you've been accumulating shares the whole way down and the whole way up. That's the only way to win. Don't be the person who looks back at 2022, 2023 in 15 years and realize you should have bought way more. Okay? Wow. Looks like the stock market is taking its sweet time to bounce back. Patience is key, my friend. Let's hope for a turnaround soon. Oh, trust me, I know. That's precisely when I decided to lump sum invest. In late 2021, 66 of the time lump sum investing blah blah. 90 of our savings are in treasury bonds right now, and my wife continues to urge me to put more in there, pointing out that we still haven't recovered the money we put into ETFs. Her gut feeling is that war is bad for the market and the world seems to be inching closer and closer to it. Yup, plenty of runway. Always be buying. Costco and Builders First Source has kept me positive since starting investing in 2021 with the cash grab that was AMC. Okay, just keep adding more shares, man. Shrugging, medium dark skin tone. Why post this on Friday? In any case, my investment in myself is at ATH in the past 3 years. I'm bullish on me. Adjusted for ego inflation. I see a bunch of investors who think the last 20 years will repeat. Can't wait for a decade sideways market. Bidenomics. What? Sorry, why should we need to be excited? Missed the point. When in doubt, zoom out. You need to look at it in logarithmic view when looking at long time frames. It's still following the general trend coming out of the 2008 crash. Even if you do consider these last few years an aberration, I don't really see much of an issue as someone with 30 years to invest, if anything. More time to buy at a discount. This mean boom or bust coming? In my case, I invested in the SP 500 as a decades-long maintenance strategy. I started putting money in last month and my intention is to put 100K into it. At the moment I was thinking about putting in 10K a month, but I don't know if it makes sense to do so if I want to keep the investment for 20 years or put it all in at once. What do you think? But my 401k says 9 YTD. No issue at all for buy hold.